All right, welcome everybody. I'm Vince Duvall with Eagle Homes, brokered by Coldwell Banker. How are you, Brad?
Hey, I'm doing just fine today. Nice to see you this morning.
Yeah.
Nice bright shirt on for Vince.
I thought that'd be a great way to start my day.
No.
So we're, so we're broadcasting on a new page today. We're broadcasting on Wisconsin or Burlington. Go ahead.
Currently called Burlington, Wisconsin Area Shop Local. Stay tuned. At the end of our podcast today, we're going to go over, hey, why are we broadcasting in a different Facebook page today?
Yep.
And some I think are pretty cool announcements.
Yeah. So let's get started. Yeah. Today last week we talked about, 10 ways of our 72 ways that we serve our clients. Okay. Today we're going to dig a little bit deeper. We're going to go into, we have 36 ways which we negotiate for you when it comes to an offer to purchase or when you're selling your house. Okay. So 36 ways, we're going to touch on about 10 of them today, or 8 to 10 of them, give or take.
Yeah.
See how much time we have. But then we're going to share it. I'm going to throw it right here in this chat, or well, I'll throw it on the Facebook page here in a minute. I actually got it saved and ready to share it here. So yeah, I'm excited about this.
Yeah, so just for a little bit of background for those, since we are broadcasting on a Facebook page, this is the Eagles Nest podcast that Vince and I think he just said, we are with Coldwell Banker, but our team is Eagle Homes, and we are a real estate team, so we can handle all your real estate needs, of course. But also, we started this lovely podcast, well over a year ago, right?
Yeah.
And we are on Spotify. You can find us on Spotify. But we've been broadcasting to our team page, but we want to kind of grab a bigger audience. And another thing we do, we cover real estate on this podcast. We cover one of our passions, which is golf.
Yep.
That's, of course, our other passions, our families. Make sure we're clear on that. So we do cover those types of things. We also cover community, small business, hence why we decided to go to this page. We're all about community. The real estate industry is about community. So those are some of the reasons why we decided to switch it up. We also broadcast this, with some more fun editing and features on our YouTube channel, which is at Eagle Homes 72 is our handle name for that.
Yeah.
For the YouTube channel. So you can always, if you don't catch this live, you can catch this recorded. So
exactly.
Yeah. So that's it. So today we're, as Vince mentioned, we're going to cover 36. Now, there's 36 ways we can negotiate for you. There's probably a few more, maybe a few less. That was my count when I got it done. Typical with being a golf junkie, that's a par score for 9 holes, of course. So couldn't resist making it 36. Anyway, so we're gonna get started. We got 8 to 10. Hopefully we can get through enough. We usually do this for about a half hour. We're not really on a timeline, so if we dig a little over, not a big deal.
Yep.
But we do want to get through these. And again, we want to make that announcement at the end. So here we go. So I picked a few that were not so obvious. I mean, obviously there's.
Okay. All right. Fair enough.
Obviously, when we help you negotiate an offer, it's purchase price, stuff like that. But one of the things that I get questions about is binding acceptance date.
Okay. Let's start. I like it.
Yeah. So what happens is we write an offer and you put on there how long you're giving the seller to respond to your offer. Respond meaning basically binding acceptance, meaning acceptance of the offer, or they can counter, they can of course reject, but it's a deadline. A lot of people are like, well, what happens if that deadline's across? And it actually happens quite a bit. It's happened a lot in the last 3 or 4 years when the market was super hot.
Yep.
Sellers were getting multiple offers and things like that. Sellers are saying, hey, I just want more time. So there was definitely I experienced a lot of binding acceptance dates passing. So what happens? Short answer is potentially nothing. So all that does, if you as a buyer say, well, I want a response by noon tomorrow, which on the calendar, if this was a real example, would be noon at February 6th, which is tomorrow at noon.
Yep.
Let's say the seller accepts your offer at 2 p.m. Is that good? Yeah, it can be. You should
2 p.m. on what? February 6th?
2 p.m. on February 6th.
Okay.
So 2 hours late.
Yep.
Can that contract still be good? Yes, it can be. Technically, you should address it in a counter or You can do some initialing on the document or on the offer, whatever. But yes, you can. It really is as one of the first things that's protection of the buyer.
Right.
Because we're gonna get into a lot of these are contingencies of the actual purchase of the home. Well, buying acceptance is one of your first contingencies, saying, hey, I'll buy it, but you gotta respond to me by this time.
Yeah.
If you don't, buyer can still take it, but buyer has the right. Let's say they come back and they accept it, but buyer finds another house that they like more. They're past their deadline, they can say, never mind, offers off the table.
Right.
It's passed by an acceptance. That's one of the first negotiating things that we actually do for our clients.
I think, yeah, I really like that one, especially in today's market. I think, well, it's got some pros and cons. Let's talk about that a little bit.
Mhm.
One of them is I see right now in a little bit more now than we did in the last couple of years, where a listings on the thing says we're going to review offers Thursday at 7 p.m. Please have them all in.
Yep.
So we write that. We write Thursday by 8 o'clock so that they have time to review them or whatever. And all of a sudden, we get a notice on Tuesday going, sellers have accepted another offer. And we're like, what the fudge? Get out of here. You just told me. And then, us as agents look like the arts that we want to call us, right? Because
Just foreclosure, full disclosure, we swear sometimes, so if you're watching with your kids, we don't say anything too bad, but
no, that's why it was Jack Art.
yeah, he was gonna say jackass, so let's just be honest.
So, just because that we're given that deadline and just because maybe the sellers are asking for a specific deadline doesn't necessarily, if your offer is great, if it's a cash offer over, ask price by a substantial amount, no contingencies, we're not waiting until then. We're going to try to force their hand. So, back to where, talking about Brad's point of binding acceptance. Hey, if the offer's strong, we're going to write a strong binding acceptance date.
Yeah.
If the offer is kind of what they're looking for, then we'll give them what they want.
Well, and a lot of sellers got some backlash on that in the last several years because all of a sudden they get a really good offer and they said, hey, they would put it in their listing. They're not going to review offers till, if it's over the weekend till Monday.
Right.
And all of a sudden on Sunday, they're accepting an offer. There's some ethical things behind that at minimum. So listing agents and sellers have gotten smarter. And I know we do this on ours where we've said, hey, showing start on Friday. We're going to run it through the weekend. We're going to look at any initial offers on Monday, except on Tuesday. So that's basically saying to the buyer, hey, give us that binding acceptance on Tuesday, please. If they write an aggressive one, it's really smart. And what we'll do for our listings is we'll put in the notes, but seller can accept an offer at any time.
Yeah.
Kind of just saying, hey, buyers, if you want to not wait till Tuesday, give us a really good offer.
Yeah, write a solid offer. And let's be honest, like there's no backlash on the sellers. Sellers are done with the house. They disappear. They're gone. It's the agent's name that's tied to that contract or tied to that listing that, people remember. So I think there's some, like you said, it's very ethical to stick to whatever that might have been.
Yeah, absolutely. So what's another one? Let's go to, did you have one that you?
We've talked about this recently. I like the right to cure. I think that is a very strong negotiation tool. And we talked about it just last week on the pros and cons of the right to cure. And, we want to make sure that if you really, really love the house and you're willing to accept, no matter what it is, the roof could be crap, the foundation can be crap, whatever it is, if those sellers decide.
Real technical terms we've got here.
Yeah, crap. So the roof's leaking, it's caving in.
The contract will list those as defects, by the way, but we like crap.
Yeah. So let's say, so the roof's defected, the foundation is, it's bowing, there's obvious issues there. And all of a sudden you get cold feet because you see this, right? Like you're like, no way in hell I am buying this. This just looks like a snowball of problems. Well, the seller comes back and goes, no, I'll fix it all for you. You know what? I'll fix it, no problem. I'll fix the roof. I'll put a new roof on. I'll get an engineer out here and fix the foundation. Because you gave right to cure,
Yep.
You're in a tight position. Yeah, you're more than likely losing earnest money unless we can find another way out for you. But so keep in mind, it's got like, if it's a dump or if it needs work,
Yeah.
and you're giving right to cure, that could be a lot of things. But if it's, a really nice house, you fell in love with it, and that's our job as agents too. Keep in mind.
So what drives, I was gonna ask you the question, but I'll just answer it. What
Thank you.
drives whether you as a buyer are gonna say, yes, seller, you have the right to cure in your offer, if you're not gonna allow the seller have the right to cure? There's a lot of things. What's the market like? We've been in the seller's market for years now. We're still in what I would say for the most part of seller's market. It's getting a little more even out there.
Yeah.
You're gonna usually want the seller to have the right to cure in most cases. I just wrote my first one last month. It's already closed. That was probably the first one I've written in years that I did not give the seller the right to cure. It's just because there was a property we weren't sure of the condition. Seller was selling as is, which simply just means, it doesn't mean like you can't negotiate money. Like if you say, well, I'll buy it for 200,000, but then your inspection comes in and says, ooh, there's more here than we thought. Just means it's as is, just means seller is not going to repair it. Doesn't necessarily, some sellers maybe, but doesn't necessarily mean that they will not adjust that price
Right.
based on the newfound information of the condition that the property is in. So that's one thing. And we did that because we had that situation. And we ended up just getting a couple $1,000s off more.
Yeah.
On a seller credit, which we're going to touch on here in a little bit. So those are different ways with how you can use right to cures. Back when it was a buyer's market, when I started this business, I pretty much wrote everyone no right to cure, because what would happen is there were so many homes on the market that while we were negotiating one with a buyer, or with the seller, all of a sudden my buyers would see another house they like and like, oh, we want to go offer on that. Well, you can't really do that. There's some dangers in offering on multiple properties. You really just cannot. Just don't do it. Don't ask your agent to do it unless you're prepared to buy 2 homes. It's a short story on that. So we just write all the time because that way we're like, oh, we're out. Never mind.
Yeah.
Now there's an expense to it because every time you do an inspection,
You're paying for that.
they haven't changed a lot in the years, but you probably have about $350.
Yeah.
Throw
Depending on the size of the house.
a radon test in there, you could be over $400. So you don't want to be doing a lot of it. So, as a buyer, but you did want that option. But again, sellers don't like it now, and it is a seller's market. So you don't write a lot of them that way. But right to cure is actually something that is always important. You should always discuss it as an agent. We should always discuss it with our clients.
Right. Yeah. All right. You mentioned seller credit. So let's talk about seller credits and what that looks like. And I got a question. I got a follow-up question, but go into seller credits.
Sure. So basically, this happens a lot with certain types of loans. So on the buyer side, the majority of time, 95+% of the time,
All percentages
Probably.
are made up in Brad's head.
oh yeah, probably 99% of the time, somewhere in that range. Seller pays all the commissions. They pay the seller agent commission, a listing agent commission, buying agent commission. Excuse me, I should use terms people understand.
Yep.
And then a lot of the title costs. But the buyer's big expenses when they're financing is the loan processing costs.
Right.
Depending on the lender, I mean, those can range from $1,000 to sometimes less to upwards of $5,000-6,000. So what you'll do is, and there's different reasons to do it, but this is probably the most common, is you'll write an offer. Again, I'll use the $200,000 example, but you'll ask the seller to pay closing costs and prepaid seller credits in the amount of, and a lot of times it's to cover all of the majority of those closing costs.
Yeah.
All you're really doing, and I tell the buyers this, the seller's going to look at your offer. If you're offering 200, but you're asking for 5,000 back, your offer is really 195, and the seller's going to take that into consideration.
Yeah.
But what allows you to do is, especially people with like FHA loans, USDA loans, VA loans that aren't putting any money down or putting less than 5% down, it allows them to say, all right, well, I'm already got to you're putting 3% down on a $200,000 home. You're already putting $6,000 down.
Right.
Right. Like, I don't want to put another 5,000 down. I'm putting 11,000 down. I'm going to move in expenses, all this stuff. So they'll say, all right, I'll go ahead and write it in. I'll make my offer maybe 205. That way I can finance that. You're essentially just financing your loan.
Yeah. Right. Right.
But there's other reasons for seller credits, for repairs that have been deferred that come across the inspection. But I see the most common one is typically to help cover some of the buyer's closing cost credits. So that's essentially a seller's credit.
Now, with that, so keep in mind too, based on your loan, FHA, VA, conventional, USDA, there's all types of different loans out there, but based on your loan, you can only get so much in seller credits, based on the loan value.
There's a max.
There's a max you can get on seller credits. So, if you're wanting seller credits and you're talking to your lender, find out from your lender, hey, with this loan, how much can I get in seller credits? Because that should be communicated with your agent. So your agent, if you're hoping for seller credits or your lender is saying you need seller credits, that needs to be communicated to your agent on what that value is.
So what's an example?
I think FHA is up to 6%. So if you are buying a $200,000 house, you can get up to $12,000 in seller credits.
Correct.
My numbers might be a little, am I right? 6%?
It is, I think FHA is 6%.
Yeah.
I mean, always check with your lender, and we always check with your lender too, because I think it even varies within lenders. So we'll make sure we have we have lenders on occasionally as guests.
We're gonna have one on in a couple weeks. I ran into a good friend of ours that just moved, and I'm not gonna spoil it because I don't want to speak too, off tone, but this lender switched brokerages, cut cost by $1,000, and was able to, not one of my clients, but was able to save a client $7,000 last week
That's awesome.
compared to his old brokerage.
That's
So
awesome.
yeah, well, I talked to him on Saturday. We're gonna work on getting him on here and have him talk about where he's at, what he's doing, how he's doing it.
Okay.
Local gentleman, you guys might have seen him around, might know him, might like him, might love him, who knows? But yeah, we'll have him on. So depending on your lender, really talk to him and find out what they can do for you.
That's awesome. All right, let's switch topics. Kind of something can be similar, but not really similar.
Yep.
Seller financing options. That's actually got added to the offer to purchase contract for state of Wisconsin not too long ago. Just as something that kind of you always had to bring it up, but now it's there if you want to actually write it in.
Yeah.
Now you probably should know, like, is the seller able to? Do they have enough either equity available, or they don't need the funds to go do something else from the sale of their home? But regardless, that's also become a very, I guess, more popular. There's different ways to do seller financing. You can do a land contract. You can do actually where the seller just strictly, either way, they're kind of acting as the bank, but there's a note and an actual mortgage, just not from a bank, it's from the seller.
Right.
I'll be honest, typically, not always, but I'd say 5% minimum. Norm is around 15 to 20% that you're going to put down on a seller finance option. It can be whatever the seller is comfortable with, but seller financing is a great way for those that, maybe, I know it used to be when you do them, they would charge a little more interest than what they could get from a traditional lender. Lately, it's like, wow, especially when rates creeped over 8%.
Yeah.
I know I had a seller finance situation where it's like, yeah, I'll finance it. I'll just do 7. I'm good with a 7% return. 7% is better with this. To the seller was better than wherever that money was going to be sitting otherwise.
Yeah, exactly. If
So
it goes
they're
on their bank account, they're only making 5%. They just made 2% more.
So we can't go into a lot of details because there's so many different avenues and rabbit holes you can go down with seller financing, but it's not a bad question to ask. Some sellers will just come out and say, I'm showing a property tomorrow, where in the listing information, the seller has gone ahead and told their agent, go ahead and advertise that I will look at seller financing, which is cool.
Yeah.
Because then we don't have to guess. Otherwise, it's usually you and your buyer are like, oh boy, do you think they'll seller finance? I don't know. Let me ask. So it's really nice on the listing side. And I do like to have those conversations with my sellers. Like, normally I don't have to ask if I really know their situation and what they're doing, but if I don't, it's a question I like to ask my sellers. Hey, would you entertain a seller finance option? If so, what kind of terms would you be looking for? Because we can advertise that. So,
and with seller finance, also, like Brad said, it's one of those things that has become a little more popular lately. Years ago, it used to be kind of on foreclosure sides. Now, because there's so many individual contract employees, 1099 employees that are self-employed in today's market, it's a lot harder for them to buy a home because, you know, as a 1099 employee, we don't want to pay Uncle Sam as much as we have to. So 1099 employees usually don't have a big W-2 or big tax return. So great opportunity if you're a 1099 employee is possibly look at seller financing. The other thing I want to talk on too, when we talk about seller credit, seller financing, things like that, is there's a lot of assumable loans out there right now. So if you know, if you're buying a house, you're selling your house, you should find out if your loan's assumable. Because if it's assumable, you might, you know, be able to get a little higher purchase price for it, or better, you know, a better deal on it. If it's assumable at 3.75, you're beating today's rates by, you know, 2.5%, 3%. So
Exactly.
yeah,
Exactly. So think about that when you're buying, think of that when you're selling. Both, you know, is seller financing work? And just real quick, usually it's not like, you know, yes, your terms are usually amortized over the length of a normal loan, 30 years, 20 years, whatever it is, 15 years. But on seller financing, the seller's not actually going to carry the note for 30 years.
no.
What there is typically, it's called a balloon. It means, all right, you can pay like you're paying for 30 years, but I'd say it's somewhere 2 to 5 years is probably most typical. Within the 2 to 5 years, you would have to pay it out off in cash by X date in one lump sum, whatever the balance is. Or then most time, a lot of buyers gives them time. If it was a credit thing, or it's an interest rate thing, whatever it was, it gives them time to then get that traditional mortgage financing through another lender, pay it off. Seller then gets a little less of the money, and they've made quite a bit of interest. Sellers, you can make really good money. If it's a position and you're charging even 7% interest, even 6% interest, just think, where's my money earning that right now? You can earn some pretty good income.
Yeah.
So those are just things to think about that.
And another opportunity for seller financing is there's a lot of people that want to buy investment properties right now. So if you see an investment property out there, maybe reach out to that seller, you know, and say, hey, would you be interested in doing seller financing? Because maybe they're just getting out because they don't want to manage the property anymore, and they're willing to do seller financing and still collect a 7% return on it.
Absolutely.
That's a great return. I mean, if we're as an investment owner, if I'm looking anywhere between 7 and 10% return, I feel good about that. So if I can have 7 to 10% return, still grow the equity on the house in case the buyer walks away or stiffs me, then hell, I just made a little bit of money and I got rid of the risk up top, or the work up top, not necessarily the risk. There's still risk there as a seller financing.
Exactly. All right, I think that one more thing we'll go over. This is kind of an interesting one, and then we're gonna do our announcement. So just hang tight.
Stick with us.
Cancellation. It happens occasionally. Whatever. Financing falls apart, inspection, appraisal. There's a number of contingencies out there that you walk through with your agent will let you know about. But every so often, you know, it's a small percentage. But I usually have at least a couple deals a year that fall apart.
Yeah, so it happens.
The most common way to end a contract is called a cancellation of mutual lease. Both parties sign it. Buyer, because you're getting out normally under your contingency protection. A contingency is basically an offer is, I will buy your house for X amount based on these terms, and the terms are contingencies.
Yeah.
So as long as you get out of that, buyer's your earnest money, which you put down, we didn't cover that thing today. Your earnest money deposit, typically in Wisconsin, you're putting 1 to 3% down earnest money. 1% is probably really common. So again, $200,000 house, put $2,000 down. That money is protected. If you cancel, it's a mutually agreeable, you're getting out with your contingencies. You and the seller both sign that $2,000 gets released back to you.
Right.
There are instances, and we're not gonna, again, this will create a rabbit hole where maybe you didn't get out of under contingencies. Maybe something happened. You cost the seller some money. That can require some negotiating on our part. I did have that happen recently, and unfortunately, the buyer was getting out of the contract for no real means. Now, I'll tell you, as a buyer, you can be at risk for a lot more than your earnest money. You can be sued for a lot more. Again, there's a lot of stuff behind that. In this situation, sellers will say, all right, I'll move on, but you kind of killed some of my time. They were actually really nice. They could have retained the entire earnest money. They gave half of it back.
Yeah.
And I was able to negotiate that half. And I had a really good listing agent and seller to work with on that. I mean, ultimately, there's only so much negotiating you can do.
It comes
But
out.
unfortunately, your clients, and then the client admitted it, like, listen, this just isn't a good decision for me. If it cost me, $1,500 or $2,000 to get out, great. We were able to, seller had a really big heart and was really understanding. But hey, I'm gonna take
Huge.
this, because this is what I feel it's cost me in time and energy. Okay.
Huge.
So that's
Huge.
perfect. So those are, I had 36 ways. There's rabbit holes down to each of these. There's
Yep,
scenarios.
exactly.
This is why when we're doing our, people always ask, like, we get pushback from buyers sometimes, like, well, I'll just tell you what I want in the house, do my search, and then we'll go look. These are things we talk about, scenarios that could occur in our buyer consultation.
Yep.
These are things we cover in our listing consultation. Consultations are really critical. Whether you're thinking about doing it now or whatever, as early as possible, as you're thinking about making a purchase, a sell, or both, get with your agent. Of course, we'd love it if you use us. Plug, shameless, I know.
That's all right.
But we wanted that consultation as early as possible because we could help you with the planning in a number of ways.
Yeah, no, exactly. All right, we talked at the beginning. We had a couple announcements. We're gonna start with one of the reasons we're on Burlington,
Wisconsin area shop local. So
yeah,
I'm gonna give the history. So Burlington, Wisconsin area shop local. This is an idea for a Facebook group I had pre-COVID.
Yeah.
Like, you know what? My wife and I have both had and do and have owned small businesses of various types in our lives. And we're super big on supporting small business. Small business is it's somewhere around 70% of all the businesses in the world. They are the lifeline of our country, to be honest. And I can't remember what the definition. I think it's somewhere around 2000.
Don't make it up. Just go.
I don't know. It's somewhere around 2000, whatever the definition is. We are filled in this area with predominantly small businesses.
Yeah, I mean, right now we're at the Loop Commons, small business.
Small business. For those not familiar with, they have rentable office space, conference rooms. They have the rock climbing wall
Studio.
It's pretty cool that we use their podcast studio. They have short-term and long-term
Photography upstairs.
Anyway.
Yeah.
So, but they're one of the small businesses and we like to support them. We could have gone out and rented office space somewhere else. We want to support small business. So I created the page when COVID kicked off. It was kind of like, I said to my wife, I'm like, now's the time.
Yeah.
Because what were all of you doing that are small businesses during COVID? The restaurants, alternate menus, having to go from those that did only carry out, didn't do delivery, were now doing both. They had to change insurances for some of that, change their menus, the way they were doing business. Retail shops, people can't come in your store and buy stuff. So shifting to online, that really didn't do predominantly online. There's a lot of different ways. So I created it right then and there. And we went from 0 members to, I remember, about 3,000 members in less than 3 weeks. Now, 4 years later, we're almost at 9,000 members. So we've got a really good audience. Now, a couple things that have gone in. It's about shopping and supporting, but there's other ways to shop small business. So I would like to do a name change. I've been struggling with what I want to change it to because I wanted to speak supporting small business in various ways.
Yeah.
From as a consumer, each other as small business owners. So I really would like some ideas. You can throw them in the comments before or after we're live. You can
message us.
Info at fly2eaglehomes.com. Whatever you want to do. Call us 262-205-7445. Doesn't matter. Messages through Facebook, whatever. We'd like to hear some ideas for the name change. And it's got to be focused around, I'm looking for something that incorporates small business, supporting each other, consumers supporting small business. And yes, Burlington, because that's just where we're based out of, but it's always been Burlington area. What's considered Burlington area? I'd say southeastern Wisconsin. We have we have small business on this group that are all the way from Milwaukee, Waukesha, Lake Geneva, Delavan, Kenosha, Racine, all over, even down into Illinois.
Yeah.
So Anyway,
About a 30-mile radius, I'd
Yeah.
say, give or take.
so we're looking for a name change too. One of the big things that's been occurring is if you actually have a legitimate duck cleaning business, I'm sorry, but I have asked this in the past. I need an actual website. So you have to create a website, and I need like a source of legit reviews of your business. Like you have to prove to me otherwise you're not going on the page.
Yeah, if your page has only been updated, once in the last 3 weeks and you just started it, chances are it's a scam.
We're getting carpet cleaners too. So what I'm doing to alter that is I'm bringing on some help because I can't do it myself. One, you have to be accepted to the page, answer some questions. If you do not answer all 4 questions, you will not be accepted. I don't care.
And they gotta be legit answers. They can't be
Yeah.
X, 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 X.
In regards to posts, I am now going to be locking down every single post will have to be approved. I'm gonna make it so that everyone is approved within 24 hours during the week.
About time.
Yeah, it's been needed, but I've been basically a one-man show with the help of my wife and another person for a little while, but we're gonna lock it down because we want to focus on what's about the community.
Right.
Small businesses take a number of forms. I don't care if you're nonprofits, whatever. I'm gonna keep certain rules in place. As agents, I've always said, we can advertise our business. We cannot advertise properties, open houses, stuff like that. No advertising specific properties. Restaurants, your goods and services, you're having specials. I wanted to limit the agents more because I don't want a bunch. And you can't sell, like, if you're selling personal stuff, that's not a small business. So the page is going to stay
So
the
you're
same.
saying your golf bag didn't go on the.
I sold one of my golf bags over the weekend. And no, I put it on all the buy sell trades.
I know you did. I was joking.
No, as an agent, I've always honored it. I've never put an open house on here. I had a admin of mine one time, didn't know my rule, did it. I removed it immediately. I'm sticking to those rules.
Was that your wife?
No,
okay.
it's actually another admin. She didn't know. This wasn't her fault.
So
anyway,
yeah.
So what I need first is we've got the support right now. I might create a board for this. These are long term.
Or a little survey,
Right now, we'd love to hear your thoughts on a name change for this. And then if you want to help, monitoring the posts and approving the posts.
Reach out to Brad.
That's what I'm saying. 5 days a week, 24 hours, they'll be approved. Same thing with your requests. I'm way behind on that.
There's 7 days in a week. He just is kind of on a work week. All right. I think we got the point.
5 days a week. The weekend, give me the weekend. I'll go 48 hours a weekend.
Okay. With that being said, also, because we're broadcasting here, we want to bring on local businesses.
Mm-hmm.
We want to, we're not, like we talked about at the very beginning, it's not just real estate, it's a little bit of golf, but we also want to support those local businesses. So a great opportunity, if you want to jump on this podcast with us, reach out to one of us and we will get you on. We will, we can broadcast we can broadcast well from your space. If your space is your house, you just want to jump on this Zoom with us.
We'll come to your space. If you want to do an episode from your space, we'll do it.
Yeah, we'll make it happen.
If you want, a lot of our guests, you'll see our lender in a few weeks. We've had lenders on, home inspectors. The majority of them come on. We broadcast this through Zoom live on Facebook, but you can just come on via Zoom. So you'll be virtual. We want to interview you about your small business. We want you to be able to advertise your small business, talk about your small business. Whatever you want to talk about, just tell us and we'd love to have you on. We'll get you on the schedule. I hope the schedule blows up because I
think it'd be a lot of fun.
I want businesses to be able to have the biggest platform to talk about,
who they are, what they are, how they do it.
What they are, their personal background. People support people that they like, And by the way, if you're an agent, come on. If you're a competitor of ours, we are not. Come on, talk about your business.
Yeah.
There's a lot of really good real estate agents out there. We're not. We think we believe we're good. Our clients tell us we're good for the most part. And but hey, there's other great agents out there. Come on, we'd love to have you talk about your business. Whatever.
Yeah.
So
all right, guys, another great week. Have a good one. I'm Vince Duvall with Eagle Homes, powered by Caldwell Banker.
And I'm Brad Brewer. Thank you so much. A little teaser for next week. You know what we're talking about next week?
No idea.
Not me neither. We'll figure it out.
All right. Have a great week, everyone. Bye.